This is Rovin RE/MAX. RE/MAX Crossroads First Realty 3. I'm Linda Montgomery, and I'm roving around North Texas, highlighting all the people, places, and things that make this a great place to live and invest in real estate. Our guest today is Scott Drescher with Highlands Residential Mortgage. Hi, Scott. Thanks for coming.
And thanks for having me, Linda.
I'd like to talk a few minutes about what is all behind the idea with refinancing. Who should do that? Why should we think about that?
All right, so the idea behind refinancing is you own a house with a mortgage. Some people own a house and they have no mortgage, and they're looking to somehow improve things with financing. So let's take the first one is when you have a house and you have a mortgage. If your interest rate is higher, then refinancing allows you to lower your rate. And it would need to be a big enough change that it's worth either covering the closing costs or financing the closing costs. So we usually say in our industry, if you can get it back in 3 years or less, then it's probably worth it.
That's a good rule of thumb.
Okay, that's the rule of thumb. Used to say if you could lower the rate by 2%, but that was back in the days when we had 12 and 14% interest rates. You don't need that big of a difference, and especially with home mortgages being so big, you needed 2% when you had a $30,000 mortgage. Now we're talking about $300,000 mortgages, so you could actually refinance with as little as a 0.5% difference in rate and cover the closing costs in enough time to make it worth it. On the other side, some people need cash out, or some people are going to be doing some improvements. You can finance home improvements and not make it a Texas cash out, or if you want to take cash out and you want to be able to pay it out as you go, as you see fit, or pay off a car loan or what have you, then a home equity loan may not be a lower rate. It could be the same or a slightly higher interest rate, but still worth it to the consumer to go ahead and do a home equity loan or a cash out refinance.
Well, are there some misconceptions about it, or some fears that consumers often have?
I would say that one of the biggest fears is that they are calling a telemarketing call center and not getting good advice. The people at telemarketing call centers are not like professional lenders like myself and many people I know here in the Dallas area, in that they're trained to close the deal, to close the sale, and not necessarily trained to give good advice. They don't have as much experience as someone might need. So I always recommend, if you're dealing with somebody that you don't know and hasn't been referred to you, go to the NMLS database and see what kind of experience does this guy have. Can you reach him when you need to reach him? Is he going to be involved after he sells it, or is it going to be handed off to a processor and you never talk to him again? Because you need to have a professional who's helping to give you advice.
Very, very important. Well, the options that are available, I'm sure, are all over the place, but are they available for no-cost refinancing?
That is such a great question, Linda, because you can always lower a rate by paying more fees or raise a rate and pay less fees. But one way or the other, there are either going to be fees or rate, because the lender has to cover those costs. If you choose to have a no-cost loan, a true no-cost loan means that the lender has raised the rate, turns around and takes the extra premium they get upon sale of that loan in the secondary market, and they use that premium to pay for the actual closing costs, and nothing is charged the borrower. That's a true no-cost. What most people do instead is they want to have a lower interest rate because they intend to stay in the house a long time.
That's why they're doing it, probably.
And in that case, then, if you're going to be in a house longer than 4 or 5 years, you'd be better off not raising the rate. Instead, you finance the closing costs. So that's not a no-cost loan, but they still don't have to pay out of pocket for the costs. They finance those costs. And that's done, I would probably venture to say, 90% of the time. It's not a no-cost loan. But FHA offers a fantastic streamlined refinance where you don't add costs except for the mortgage insurance. The mortgage insurance could even be paid by the lender. And then you don't have to have an appraisal, and you don't have to have verification of employment and things like that. You just have to know that they still have a job.
Excellent, excellent. So if you're considering refinance, you might want to talk to your own lender about that, but we certainly appreciate all the advice that we get from Scott. Thank you for being here today.
And you're welcome.